UNDP partners Nigeria to realize its full economic potential. Tariffs caused some China imports to crash 44% in September. Plus, oil prices edge down as risk premium fades after Gaza deal with Brent $64.56 a barrel. And our guest in the studio, Dr. Sterling Ellis, a capital and commodity markets professional, who will be talking about the opportunities and challenges of the proposed Africa Mercantile Exchange. The program is Business Experts, reaching you from Abuja, Nigeria's capital. I am Maria Adozakari. Welcome. Amid global uncertainty, the business-as-usual narrative is changing and business unusual is becoming the new normal. The United Nations Development Programme, UNDP, is partnering the Nigeria's economic team to reposition the country towards realizing its full economic potential.
Oil and gas, because I keep saying people can't eat, drink oil and gas.
Across the world, shifting economic balances continue to test developing nations, and emerging economies like Nigeria remain amongst the most vulnerable. This meeting seeks to upscale Nigeria from a consumption-driven economy to one anchored on innovation, productivity, and human capital development.
You need to ensure that you have the right governance framework, the regulatory framework, the policy framework that will attract people. We need to reduce the cost of doing business, the risk and the associated cost of doing business in Nigeria.
GDP in Africa, Nigeria is among the top 5. But if you look at economic complexity, Nigeria is among the bottom 5.
And the shifts that we've been talking about here today is that development finance is shrinking and shrinking fast. The ODA is going down. We see shifts from aid to trade. We see shifts, for example, in the technological space.
The collaboration also focuses on strengthening policy design, attracting sustainable investments, and building a more resilient economy, from energy to manufacturing and digital services. Now, in a similar development, the United Nations World Food Programme, WFP, and the Africa Development Bank are calling for increased investment in innovative and production-oriented food systems in Nigeria. The United Nations Resident Coordinator in Nigeria, Mohammed Fall, speaking on the theme investing in innovative food system solutions in challenging contexts, says increasing the investments will strengthen resilience and address food insecurity in fragile regions of Nigeria and across Africa. This is as he posits that food security is not only about agriculture, but also about peace, dignity, and stability.
System thrive, community heals, and when community heals, nation prosper.
To ensure that we can have seeds and we can produce seeds locally, because what we are planting now are grains, are not seeds.
And the good thing about Nigeria is that every state has potential for agriculture. There is no state whatsoever that if they want to go into agriculture, they cannot.
Now on the currency market, Naira gains as external reserves maintain steady rise. Let's see the latest official exchange rates of the Naira against other major currencies. Business Express, our discussion is focusing on the proposed African Mercantile Exchange, MX, a continental commodities and derivatives market being considered for boosting intra-Africa trade and regional integration, deepening Africa's economies and increasing access to global markets. The proposed exchange can establish new frontiers for Nigeria and continent in trade facilitation. Access to finance for farmers and producers, regional integration through the African Continental Free Trade Area in attracting foreign investment into Africa commodities, energy, petroleum, financials, and rare earth mineral spaces. Dr. Sterling Ellis, a duty-qualified transcontinental capital and commodity markets professional, is in the studio with us to demystify the opportunities and challenges, of course, of the proposed African Mercantile Exchange, MX. Welcome.
Thank you. I'm glad to be here.
Let's begin with the understanding of the concept exactly. What would you say is an African Mercantile Exchange? How does it differ from the existing commodities exchange in Nigeria, that is the Lagos Commodity Exchange and FX Commodity Exchange?
Yes, thank you very much. The African Mercantile Exchange is pretty much a typical exchange that seeks to establish collaboration with global exchanges that include India, United States of America, and quite a few other global exchanges. The African Mercantile Exchange is pretty much one that provides trading in commodities. And the trading in commodities would allow for the buying and selling. It's a platform that allows for buying and selling of commodities. It offers a structured, very streamlined contracts plus pricing mechanisms. It facilitates price discovery and risk management, and it enables market transparency and efficiency. The Nigerian commodity exchanges are pretty much not endowed with the capacity to expand their scope. They essentially are relegated only to the Nigerian space. The African Mercantile Exchange is pretty much mobile enough to go cross-border. That's to say transcontinental in scope. The product range is also quite varied. The African Mercantile Exchange can deal in products beyond the Nigerian space. The Nigerian commodity exchanges cannot go beyond Nigeria, but the African Mercantile Exchange can establish relationships across and transactions across the Nigerian space. Finally, the regulatory framework is such that the MX has the capacity to harmonize rules of engagement that would not be amenable to the Nigerian specific commodity exchanges. So if we are to grow, we have to be able to broaden our horizons in terms of scope, product range, and be able to also transcend just the Nigerian regulatory framework. We have to be able to go cross-border into other national spaces. So those are the three basic differences in scope, product range, and regulatory framework.
So let's come home to Nigeria, given our role in agriculture, oil and gas, and rare minerals, earth minerals that is. What specific opportunities does the proposed MX offer to Nigerian producers, exporters, and of course the investors?
Well, there are definitely quite a few opportunities for Nigerian producers and exporters by way of increased market access, improved price discovery, and risk management. As far as the Nigerian investors are concerned, they can quite readily diversify their holdings. They can also increase their liquidity and grow beyond the Nigerian borders. So I believe strongly that this is a game changer for the Federal Republic of Nigeria, given our concerns about having the capacity to pivot into other economies in order to be able to generate revenue streams for the long haul to satisfy the national development plan of the Federal Republic of Nigeria over the long haul, so to speak.
So would you say the timeline for establishing the MX evolving for actual launch in achieving global connectivity?
Well, I would imagine that we've made some sizable positive movements relative to the interfaces with His Excellency Bola Ahmed Tinubu, GCFR, the President of the Federal Republic of Nigeria. He has pretty much ascended and acquiesced to the fact that Nigeria needs the African Mercantile Exchange and that we will do it. And this is in line with the fact that his reforms have been actually making a positive trajectory in movement. So we have the exchange rates being stabilized. Inflation is pretty much easing. The exchange rates, like we all know, like I said, is stabilizing. The foreign reserves are pretty much spiking. I think it's pretty much at about 42 billion now. And the debt indicators are dropping. The revenues are flowing in. And of course, the economic growth is increasing. So our president's policies are definitely gearing up. And by 2030, we are quite confident that through the capacity of the African Mercantile Exchange to go global on a 24/7 trading platform, we'll be able to generate revenue streams that would assist us in the physical space to address some of the economic challenges that we currently confront.
That would be beautiful. Now let's talk about farmers. One of the persistent challenges confronting African farmers is price volatility and limited market access. How will you say the MX will address this issue, particularly for smallholder farmers in rural communities across Africa?
Yes, that's quite a challenge for small-scale farmers and farmers in rural Africa. There are definitely a lot of innovative ways that we can address these challenges. Some of the potential solutions include warehouse receipt systems, market information systems, contract farming, and capacity building, and market linkages. Of course, the small-scale farmers would benefit in terms of increased income, reduced losses, and improved productivity. So these are areas where we can explore solutions and kind of tweak, if you will, other cutting-edge strategies that would help our small-scale farmers.
That would be really nice to actualize. So how do you anticipate the AMEX transforming access to finance for local farmers and small-scale producers, of course, who often grapple with exorbitant exchange rate and limited credit options?
Well, this has been a challenge all over the world, and Nigeria is not alone. The African Mercantile Exchange is definitely endowed with the capacity to establish partnerships and collaborations and engender risk management tools and be able to provide digital financial services. And of course, warehouse receipt systems have been practiced in Malawi at the ACE in Malawi commodities exchange. And they've been very successful at it because farmers would pretty much store their produce in warehouses and not necessarily be forced to sell these commodities immediately. When it is right and favorable, the farmers can now access their crops from the warehouse and pretty much generate profits that ordinarily they wouldn't have been able to have.
Let's talk about the executive. What governance framework and regulatory measures should be instituted to ensure transparency, investors' protection, market integrity, price discovery, and avoid market improprieties?
Yeah, these are serious considerations that governance imperatives and frameworks hinge upon transparency, accountability, risk management, and stakeholder engagement. Of course, regulatory mechanisms call for clear policies and procedures, and of course, monitoring and enforcement is a very key area that the African Mercantile Exchange will focus on, and of course, supervisory oversight and regulatory oversight will be emphasized, and evaluation of performance is an area that we will be pretty much on top of to bring international best practice to the fore.
Let's talk about other countries. Are there lessons for Nigeria and Africa from the success and failures of other global commodity exchanges, maybe like Chicago Mercantile Exchange Group or India's NCDEX?
Yes, the Chicago Mercantile Exchange Group is comprised of 4 exchanges. These include the Chicago Mercantile Exchange, the Commodity Exchange, the New York Mercantile Exchange, and the Chicago Board of Trade that has been in business for almost 200 or more years, 250 years or so. So the expectation is that we'll pivot on the backbone of the Chicago Mercantile Exchange Group. So the experience that they bring to bear is priceless. So the lessons that we would pretty much learn from include establishing robust regulatory frameworks, market infrastructure development, promoting transparency and price discovery, risk management and hedging, capital building, capacity building, and training, and regional integration and cooperation. It is vital that we key into the Africa Continental Free Trade Area's mandates, which would allow us to have regional integration and be able to increase the prospects of satisfying the yearnings, not only of the Sustainable Development Goals, but scaling beyond that and be able to address the challenges that we have in Nigeria.
Dr. Ellis, quickly, what would you say, when would you say should we expect this to come on?
Well, we're looking at potentially the gestation period being 18 months. We're looking at the third quarter of 2026. We are pretty much involved with the joint venture agreements and the regulatory approvals. And of course, we'll need time to do the tech and infrastructure setup. We would be also looking to do a pilot launch, after which a full launch will follow. And of course, after that, we'll do some scaling and be able to add additional products so that moving forward, we can finally say Nigeria has turned, a new corner that would pretty much allow us to breathe easy.
So, Dr. Ellis, would you say the discussions you've been getting are positive so far?
Yeah, I would imagine that the president, the secretary of the government of the federation, capital market academics, capital markets professionals, they are all enthused about the possibility of Nigeria being able to trade electronically and be able to have a broad range of contracts and increase volumes by being directly connected to the global financial markets. and be able to generate revenues as a result that would help ease the pain that Nigeria has been experiencing for about 111 years now. But the African Mercantile Exchange is a game changer. So we at the African Mercantile Exchange believe strongly that it's crunch time and that Mr. President is very ready, and by 2030 we would have achieved the $1 trillion economy that we've all been yearning for.
Amen to that. Dr. Sterling Ellis, thank you very much for your inputs this afternoon.
Thank you very much for having me. It's been a pleasure.
Moving on, it's a positive run on the Nigeria's equities market this Friday as the NGX All-Share Index appreciated to 146,988.04 basis points, with market capitalization also advancing to 93.295 trillion naira. 386.569 million shares were traded on the floor of the exchange, valued at 11.263 billion naira, traded in 21,842 deals. Market analysts expect the market to reach $100 trillion again in the coming weeks. On the global scene, U.S. stock futures were muted while European stocks are in third straight weekly gain. A look at the global stock markets around the world is next. Let's talk commodities now. Oil prices declined this Friday after settling around 1.6% lower in previous session, as the market risk premium faded after Israel and Hamas agreed to the first phase of a plan to end the war in Gaza. Brent crude futures were down 33 cents or $0.5 at 64.89 cents a barrel. U.S. West Texas Intermediate crude was down 24 cents to $61.27 per barrel, both benchmarks on track for weekly gains. Meanwhile, Israel and Palestinian militant group Hamas signed a ceasefire agreement on Thursday, and the first phase of the U.S. President Donald Trump's initiative to end the war in Gaza. Still on commodities, record run in gold creates new rulebooks for investors and federal rates cuts. A look at prices of commodities on the global market is next. From the commodities market, we end this edition of Business Express, the last for the week. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns next week. Until then, keep thinking and doing business. I am Maria Aduzakari.